Hello and welcome to Skills to Pay the Bills. I'm your host, Tia Young, and today we are going to talk about wealth building financial strategies for young adults, middle-aged adults, and for those adults who are approaching retirement. Our first guest is the founder and CEO of Yetti Financial, LLC. She is also a real estate professional and educator. Our second guest is a litigation attorney who practices in Washington, D.C. on behalf of plaintiffs. His practice focuses on personal injury, immigration, and most recently, probate law. He focuses on helping families seek justice through difficult times, and he is also a financial services professional. Our two guests are unique because they have blended their talents together and are making a major difference for individuals and families in their respective communities. Ladies and gentlemen, please welcome founder and CEO of Yetti Financial, LLC, Ms. Yetnayet, Yetti, that's what we call her, Esatu, and litigation attorney Howard Haley of the Haley Firm PC. Welcome.
Thank you for having me, Lisa.
Thank you, attorney.
Thank
I know you guys have had a busy day and coming down that beltway.
Yeah.
I appreciate it.
Thank you so much for having
Well,
us.
Happy to be here.
We have a lot to cover today, so we're going to get started. Yetti, I'm going to start with you because it's been a couple of years since you've been on the show.
Yeah.
So tell us what you've been up to since we saw you last.
Well, I have worked hard and I have accomplished many things, and I thank God for that. And I was really going out there and educating all people about financial services and real estate. For that, I was recognized by the Governor of Maryland, Governor Larry Hogan.
Wow.
The Secretary of State,
Awesome.
the Prince George County and Anne Arundel County Executive. Also, the Deborah C. Offer Foundation recognized me for being a woman of virtue walking in excellence. In my real estate area or business, I was recognized as a top producer, $1 Million Member Club, and 100% club with Remax Allegiance. Yes. So it's been a very exciting years, and I've been working hard, and I deserve what I.
Right.
You know,
and I'm noticing something
I got what I
shiny there
deserve.
on your finger there. What is that all about?
Yeah, that one is 2019, and with First Financial Security for my production, the company gave me this award. The ring was 1 diamond.
Oh, wow.
And I'm a member of the Champions Club now, and also legally I have a shareholder with First Financial Security.
Wow. That's
so it's a big
wonderful,
achievement,
Yetti.
yeah.
And the boys are doing good?
They're doing fantastic.
That's
Thank you for
wonderful.
asking. Yeah.
That's wonderful.
Yeah.
Well, counselor,
Ma'am.
you are the principal of the Haley Firm PC, and you're also an financial services professional in Maryland, D.C., Virginia, and Pennsylvania?
Yes, ma'am.
Okay, so talk a little bit about what you do and how you and Yetti connected. How do you all partner?
Well, as a litigation attorney, and one of our senior counsels is retiring, so I've assumed a lot of responsibilities under his practice, which is predominantly probate law. So we've got a lot of clients who come in who are dealing with the difficult times of having to bury a loved one. But many times there's a question of, well, how do we get this done? How do we finance this? How do we deal with it? So it was a perfect marriage between the financial services that Yetti has and the legal practice that I have. It just made sense. The two marry well greatly. For example, if you're burying a loved one and there's a property involved, sometimes some of the providers don't want to work with the family in terms of getting the money. And so there's this mad dash to try to come up with the money. Well, a lot of the financial services that Yetti Financial has and that I have been able to working with the companies that I work with, have given me the ability to help families more capably manage that financial burden at that time, as opposed to not knowing. Now they have an idea for safety and security to figure out how we're going to do this, how do we plan this, and it becomes a part of the family plan. So it's been a great marriage. So the relationship that I have with Yetti has taught me many things, because Yetti teaches me a lot about how to harness the power that the family already has and better refocus the financial assets in order to be able to sufficiently handle the loss of a loved one, as well as to prepare for things like new births, new college debts, new expenses of buying a home or of buying a new car if you have to because you got to pay for school. All of these things are financial drains that this financial preparation is good for.
Right. Well, I have a question for the both of you. Is there a difference in how the cultures respond to end of life? As an African American, when I grew up, I'm just assuming that things maybe haven't changed a whole lot, but you guys can tell me if they have. We didn't really plan for end of life, and a lot of times churches and the whole neighborhood had to come out, but it was an educational thing. You know, we just weren't educated. As a child, I remember that the Metropolitan Life agent would come to the house, and grandma would give $2 or $3. I mean, you know, for burial, and when she died, maybe there was $1,000 in the account, but it was nothing at all to think about leaving a legacy for your family. So can you speak a little bit about that, and in particular with the African American culture?
Well, what I've found, in more often than not, more than 90% of our community do not have an end-of-life plan and don't have a life insurance policy, if you will. So a lot of the older clients that I deal with in my practice in the district, many of the older family members own a home, but they don't know how to get to the liquid cash in the home. Or there's a question of who actually owns the house. For example, just recently we had a family where the family member that lived in the house died, but at some point the house was owned by the parents and no one ever did a probate. So they never transferred the house from the deceased parents to the child that was living in the house who is now deceased. And the remaining relatives are not, there's no simple immediate heir. So there's a variety of heirs and everybody's entitled to shares under the prosterpes or the intestate laws. So it becomes more complicated. And so in those situations, we then have to arrange partnerships with the funeral home that the family selects or whoever's going to prepare the body for burial, as well as the services for the church where they want to have the burial, and agree to get them to abate the cost until we can have the house sold. But then you get into the issue of, well, who wants to sell, who doesn't want to sell? So those become other problems. And so find myself having a need to educate the other members of the family. Well, when your situation comes and this is you in the position of the deceased one, are you prepared or not? Now, you can't have that conversation at the same time that you're dealing with the burial, but that's where the relationship between my firm and the family is tantamount. Because if we don't have a relationship, and if the family sees me as just some greedy lawyer trying to get paid for probate, then it doesn't work. And so my clients are literally like family to me because you get to know so many things about the family along the way. It just made sense for me to go ahead and get my license and be prepared to assist them with their financial planning as well. And so in this particular case, 3 or 4 of the family members didn't have a policy or didn't know, or some of them had a policy with the job, but they left the job and thought that policy was still in force when it's not. When you leave the job, typically with a term insurance policy, it's gone. There is no insurance left over. So you have to figure out what you're going to do. And if the next job doesn't offer it, well, what are you going to do? And they had no idea. So we talked about these things, and we now have a plan in place for the other 4 branches of the family. And this first branch that we had to deal with, we resolved the issues, everybody got on board with the same plan, and we're able to financially take care of what they need to take care of so their loved one was well cared for.
Wow. Yetty, do you have anything to add to that?
Yeah, I mean, I'm born in Ethiopia, in the capital city of Addis, and the same problem in our community also. They don't want to hear about death, but today insurance is not all about death. And I'm creating, the awareness in the community, but we do have churches that are contributing for funerals, and also a group of people contributing, money for the burial. So we have similar situation, but that's why we're here. I mean, we're just trying to create awareness within, the community.
Talk a little bit about who your clients are.
Well, so far it's everybody, but I'm invited to different big events to speak about the financial service and the benefits, and also individuals, churches, nonprofit organizations. The American nonprofit organizations are partnering with us in, setting up events, and those are the areas that I'm so far being successful in sharing the financial service products and services.
How are your clients different, a little different, or the same? Who are your clients?
Essentially, we have the same client base, if you will, but I've started to do some things like with the families that we were talking with before. We are encouraging our family members that we interact with in my firm or in my legal practice, that younger family members, especially those that have children, we are encouraging them to get in the mindset of having a review for a will. If you're under 30, at least once every 5 years, and if you're over 30, at least once every 2 years. And by reviewing your will because of things that change, like a new child or a new home purchase or new other expenses that have come up that were not discussed before, that you didn't have a plan for or you didn't predicate for. But the beauty of the financial services are, for example, we were talking about life insurance before. Life insurance has changed. It's not that you have to die now to get your benefits. There are a variety of products out there now where you can have living benefits, so that if you get chronically ill or critically ill, or if there's a terminal illness, you can use your life insurance benefits while you're alive. You don't have to die to use them. And the beauty of some of the products that we'll talk about later is it's your money and you're borrowing from yourself, so it's not a taxable use of the funds. Right. And so it's opened up a whole new realm of being able to create generational wealth that can actually be utilized for the furtherance of your legacy, which means it's not something that the community is now beginning to understand. It's not like you're talking about, oh, what happens when I die? No, it's about, well, how do you want to use this while you're alive, and what can you do with this? Instead of waiting on someone to die for a windfall, you can help the family grow the generational wealth while you're alive.
We have about a minute before we have to go to break, but you mentioned something. You said you're talking to young people. I have a 26-year-old nephew, and I can't get through to him. How are you, Yetti? How are you, and how are you all getting to the young people to talk to them, to get them to pay attention about, financial preparing for themselves and for their lives?
Well, the younger people, as you know, they love money.
They do.
But they just don't know how to save it. So you just have to ask enough question about, how their saving look like and how much they get for their money, who really benefits from their money, more than them. So you have to really explain how the banks are really becoming more richer all the time. And then we became really, the people with no money. So they understand. I mean, you just have to really know how to approach them. But
so
there
I
are
have to get some lessons.
Yes, we'd love to talk to him.
We're going to take a short station break, but we will return after these important messages. So don't touch that dial.
Minds can achieve anything. We make sure they get to college. Federal student aid provides more than $150 billion in grants, loans, and work-study funds to make college possible for anyone with the mind to get there. Because if given the chance, minds will do great things. Federal Student Aid, proud sponsor of the American Mind. Learn more about money for college at studentaid.gov.
Welcome back. You're watching Skills to Pay the Bills with our special guests, Yetti Esatu of Yetti Financial, LLC, and attorney Howard Haley, principal of the Haley Firm, PC. Prior to the break, we were talking about communicating with the young people. And I don't normally have problems with young people, but I'm having problems with my nephew. He's 26 years old, and I mean, he doesn't listen to anything I say. And we're now talking to him about, things that I wish that I had done when I was his age, but people weren't talking about that to me when I was 26 years old. I just thought the dollar meant go spend it. So what else can you say about that?
Well, the way I've gotten through to younger folks that I've mentioned in my office, especially those that are younger with children, is I ask them the question, when you are, for example, let's use my roommate. I have a roommate who's 23 years old right now. He's got a son who's 2. So I ask him the question, where do you want your son to be when he's your age? Do you want him to be able to draw from a financial legacy that you prepared for him? Or do you want him to struggle in the same way that you're struggling? Because if you want him to struggle, he can still struggle, and you don't have to give him the money that you put aside for him. But if you want him to be able to know that that's a resource available to him, then you can teach him the financial knowledge that you are learning now, so that as he grows, he understands the value of the wealth that you're putting aside for him and what that legacy means. For a 26-year-old today, for example, especially if they're living at home, how complicated or how hard it would be for them to put aside $100 a month. $100 a month for a typical 26-year-old in good health, or not even excellent health, but just good health, would translate into a roughly $170,000 policy that has living benefits that where they can draw from when their child reaches 30 years old, they can pull 20 or 30,000 to pay for college.
Yeah.
Or if the child's not going to college and they do a voc tech rehab or they create their own business, that same money could be used as a down payment for a house. Or it could be used to pay for the summer home in the islands somewhere. Those concepts and that idea or that ideology is missing from the young generation today because we're not explaining to them how they can get to their dream. They're seeing TV, they're watching videos, they're seeing people with these multi-million-dollar mansions, but no one's giving them the financial education to get from point A to point B. And that's where we come in with, this is a vehicle that will get you there. Now, if you want to get there, then you need to make the changes necessary to be able to get there. If you want basic security, minimum amount of $100 to get you there. If you want massive security, then whatever dollar amount you want, you can scale it up to whatever dream you want. And many of the young people, they understand the terms of scale, dream, financials, and saving. And how do I get there?
Right.
They just need to know how. And we give them the keys to the car and let them drive whichever way they want.
Okay, good. And Yetti, I know you have two sons. Your sons are often helping you in the business.
Yes.
So I guess you've learned the secret to get them to pay attention.
Oh yeah, definitely. I mean, they love what I do. I mean, growing up with me only as a single mom, you know, seeing me, watching me, you know, doing different types of businesses and grew up with them, you know, what I do. So they always participate and they share what I do with with the parents of their friends.
Right.
And, you know, they said my mom is in real estate and in financial services. And whenever they quit a job or maybe get a new job, they just tell them, you know, my mom, you want to talk to my mom? So they try to generate leads and they understand what I do. So I'm blessed with that.
Right, that's good. Talk to us a little bit about how both of your practices foster the creation of generational wealth. We've mentioned that term a little bit today. So if you can even give a definition, your definition of generational wealth, what does that mean?
Well, generational wealth to me is just as a parent, you know, I have to work and then whatever money that I'm earning from the businesses or from the job that I had in the past, understand how money works and save it at the different places. I mean, I like to diversify all my investments and then from real estate to financial services and other, you know, stock related stuff that I do. So those are the things that I grow as long as I am, you know, able to work and then pass it on to my kids. But in the meantime, I want them to understand what I do and then try to adapt that new financial culture as a Black woman, as an African heritage. I just want them to understand, you know, how money works and then adapt that new financial culture and do the same thing that I did for them or that I'm doing for them to my grandkids and then duplicate it and then let the future generation have a financial freedom and get what they want in life. Yeah.
Howard, what do you say on that?
Well, the only thing that I would add is, for me, generational wealth is the ability to create a mechanism by which the earnings and the fruits of my labor are multiplied or magnified in the life of the generations that come after me. And so I don't want them to look at it in terms of trading dollars for hours like I did when I graduated high school. I traded many hours for small dollars. I want them to understand how to make their money work for them and how to work towards a goal that is greater than the immediate scene, if that makes sense.
Yeah.
I don't want them to walk in a store and say, well, I can't afford this because I don't have the money. I want them to walk in the store and say, well, if I want to afford that, how much work do I have to do to get it? And then if I choose to spend from my savings to get it, how much is it going to take from me to put it back? Because I want to make sure that they understand that you can't build generational wealth if you're spending what you've accumulated. You have to build generational wealth by earning and adding to what you already have, but you're adding more than you're blowing.
Right, okay, that's good, that's real good.
Yeah.
Two terms that I'm hearing a lot, one of them I know something about and the other I'm just still trying to figure it out. And that's IULs. You hear a lot of people talking about IULs. There are different types out there. So I want you all to talk about that. And then this new program called Kaizen, if you could touch upon that and tell me what that really is.
Yeah, I mean, I had a client who stopped by at my office before I came here, so I did a few illustrations for that individual. So I can go over the examples that I brought here. The individual was 25 years old woman, and she just came to learn about the product. And when I run the illustration for 25 years old, it gave her, number one, a life insurance coverage of $1.5 million.
Wow.
That is, she can consider as a reserved money if anything happened to her, which is terminal illness, chronic, critical illness, and injury happened to her life. So whenever something happened, she would be able to tap into that and be able to use. Number two, this could be used as her retirement account. So it will cost her $14,350 per year, only for 5 years. 5 years, $14,350. After that, there's no investment. This is the Kaizen, yeah. She does not need to invest more than 5 years, but the bank fund her retirement account, matching what she put in. Like for every dollar, they give her $3. So that means 75% of the account or the plan funded by the bank, 25% comes from her. So it is not really a huge amount of money when you look at it. 25 years old, many people, 5 years plan, and then many people will allow their kids coming back from college and stay with them for free. So in the meantime, if they really encourage them to understand and learn a plan like this, it will give them $95,000. For this woman, it gives her $95,000 tax-free retirement income from age 65 up to 100 years. So how many people do you know that has that kind of retirement income only for 5 years investment?
5 years,
yeah.
Now, so does she have to be earning or have a certain amount of income that
Well,
she
they're
has?
required to earn at least minimum 100,000, but that could be combined income, spouse.
For spouse.
For spouses, yeah. Husband and wife could be 50-50, and then they can only get it for one person, yeah.
It's a beautiful way to leverage somebody else's money to grow your
retirement
accounts.
Retirement.
Yeah.
Well, what about the IULs? What does that? What does IUL mean?
IUL stands for Indexed Universal Life.
Okay.
And long story short, it is indexed to the stock market, but your money is not in the stock market. Okay. So the providers, they provide a facility, they facilitate the operation for you to put your money into an insurance policy that builds a cash value that is tied to an index of the market. But the cash value that you build, it grows as the market grows, but your funds are locked in the event that the market goes below zero. So for example, in 2008, when the market was, just before the market dropped, the market was up 18 or 19 percentage points. So you would have gained the 19 points. But then in 2008, when the market dropped 32 points, your funds were locked. As the market went to a negative area or negative territory, your funds did not lose any money, you didn't gain any money. You stayed at zero for that period. Then as the markets recovered, which everyone knows after 2008, the administrations changed, the market, they made changes to stopgap the market, and the market recovered. As the market has recovered all the way through the market, the record highs of the market, your funds have grown and not lost any funds. And then as the market may take a dip here or there, you don't lose. So you don't go below zero. And the reason these funds work the way they do is because there are IRS provisions that do not allow them to lose money. So the market is the vehicle by which you are gaining your results. Now, a person who is a stock market guru, they can play put and calls and do their thing and probably do better. But for the average person who isn't a techno wizard or a stock wizard, this is a more secure way to have a greater growth of return of your funds.
And you're not losing money.
And you're not losing money, but you have the added protection of the life insurance policy so that in the event that something catastrophic does happen, you're protecting your family in the long term.
Yetti, we have, if you could give us another example of understanding how money works to build wealth. I know
build
you brought a
wealth.
wealth. If you could explain how that
Yeah,
how that
I
works.
can explain.
You got
I have
1 minute.
Okay, I have an example. I mean, if somebody has a loan, a mortgage loan for $405,000, and they get like, I mean, they have 4% interest rate, and their mortgage is $2,800. This illustration shows if they keep it just the way it is calculated by the mortgage company for 30 years, and then there's another vehicle that we educate the public to shorten the time and keep more interest money, interest that they have to pay or they were planned to pay to their pocket. So they can finish their mortgage in 12 years and save about $185,000. But if they keep it the way it is, they pay $290,000 to the bank. So it's better than giving money, you receive money.
Right.
So we're teaching them how to keep more interest or earn more interest from every dollar that they put in to grow wealth for the generation that is coming. And we also teach them about how annuity works, and then there are so many people who are changing or leaving their job through retirement. So we really share, what we know about how to protect their money from the market loss, and we roll over people's 401k and much more.
Very good.
Yeah.
Well, the viewers are seeing your telephone numbers and your websites and emails right now, so they can call if they have more questions to ask.
Yeah,
either of
definitely.
you.
Yeah.
Absolutely.
Thank you so much. It's been a pleasure.
No
The
problem.
pleasure's
Thank you
ours.
so much for
Thank you.
having us.
Thank you.
You're welcome.
Thank you for watching Skills to Pay the Bills. We hope that you have enjoyed listening to and learning from our two outstanding professionals, Yetti Esatu and Attorney Howard Haley. Just remember this, folks, it's never too late to take the time to talk to a professional about building wealth and securing your retirement income. While it is better to start early, there are various plans that are for those of us who did not start our retirement plan in the earlier years. Get in touch with a financial services professional today. Please join us next week for another great show on Skills to Pay the Bills. Bye.